Welcome to the Pump and Dump channel for another video. It's been quite a while since I made one. I made one 4 months ago, I think, comparing SM Energy to Nordic American tankers in terms of investment returns, performance, whatever you want to call it, over the foreseeable future. And 7 months ago, I think, I made the previous last video closing down the theoretical model portfolio, the one you see here. And at the time it was up 185%, and as you can see here right now, if you remember, if you ever watched one, you can see it would be up about, it'll be over 300% to be quite frank, because I have not included dividend payments here. But 296 is just based on the share price movements. Now going into the individual positions, so let's have a look here. African Gold Group, an absolute turd. Nothing is happening. The construction has not started. The money has not been raised. The management is trying to grow the reserve for the next cycle. It's kind of a bit late for them to cash in on the current cycle that's been underway and is dying off very rapidly because the input costs are rising and the metals prices are stagnating, not exceeding the 2020 highs, whereas input costs are rising off of the 2020 lows, and so the margin compression there is real, and it's yeah, it's just not working out. So a turd, one turd. Next one here, let's talk about PBF Energy. So at the time when I purchased it, I had my valuations. If you ever watched it, you remember 1 year and 2 year targets. 1 year target was reached, exceeded, and it dropped to half of that, and then it has rebounded as of recent to just a bit above $30 a share, and then it started going down again. And yeah, here this is a case of me looking again at the company, and I did so in February, I guess it was, and I sold it at 25 and change, and there was a dip after I sold it of like 20% to $20 and change in PBF, and then it rose to 30, and I sold it at the time because I had done my thinking, I had done my reading, my research, reading through the company's financials, and I came to the conclusion that the valuation would drop in half, and I stand by that. I think the share price will go down. I think it will normalize around $17 a share, especially when the oil and gas prices start going down, because when I bought it, I remember explaining on the channel here that it was a play on rising oil and refined product prices, because most of the value, the NAV in these refining companies, is the product that they have stored in the tanks. So if the value of the goods they're storing goes up, the share price will go up, and you know what they earn in terms of cracking this, you know, the oil and making refined product. You know, in an up cycle, it's a positive contributor. In a down cycle, it just melts them. So over time, the earnings from, you know, their core business probably don't even matter. Next one here, silver, not silver, safe bulkers, and we'll also include Diana Shipping into this. I mentioned, I think, when I closed down or did the last video of the theoretical model portfolio, that I had exited these positions because I thought rates could not go much higher, and then we started seeing oil prices going higher and higher. And one has to remember that these ships obviously use oil input costs. So what happened here was I figured out that the margins here are compressing, just like I mentioned with the projected margins on the project of African Gold Group's on its mine, how that would contract with the higher input costs and declining sales cost of the product or the service that these companies are offering. That obviously is a negative. I did buy some safe bulkers at $3.60. Can't remember, but it was probably a few months ago. I bought some at $3.60 because I had calculated that that would give a theoretical 15% rate of return, and I was going for a 2% clip, which probably would be around 420 where it is now. Again, it's kind of where I would be selling it. So that was a short-term trade that worked out very nicely. I didn't buy back any Dana shipping, but yeah, this is just the way it is. You know, these industries are cyclical. You have years where earnings from the core business are improving and years where they are deteriorating, and they are deteriorating. It's just not yet reflected in the share prices. So I think that these companies have a high probability of going down in terms of yeah, the valuations over time. CNX Resources is one that I've always had a position in for the longest time. There's been a few times where I probably for a few days didn't have a position in it for whatever reason, but yeah, I've been very positive on it. I remember, I think it was in 2020, how the management was explaining that over time the share price would rise to $35 a share, and their explanation was very different from what's reflected in how the market has moved. They had talked about a 6.5% discount rate on the cash flow because of their profile, and they kind of were comparing it to Chevron or someone like that. And given how natural gas and also oil and natural gas liquids prices have moved, the valuation is there at $33 a share right now. I think it was at 35, $36 just the other day when natural gas was around $8 a share, and not a share, an MCF. And yeah, here is a clear case where the market is pricing at 2/3 of intrinsic value. I don't know why. There's other companies that are the same, like SM Energy, Laredo Petroleum, Antero Resources, EQT Corp, Range Resources. They're all trading at 2/3 of their intrinsic value, and I don't know why that is, but it is that way. And so that's something, if you are trading around in these things, that you need to understand, that these discounts to intrinsic value, I don't know how they come about, but they are there, and if you don't respect them, you get destroyed. So let's talk here about Petrobras and PetroChina. These two have been steadily going up in channels, you know, the kind of wide moves up and down, but it's in an upward channel. They've been paying lots in dividends over the last couple of years, so that's obviously been very nice to have that. And we talked about DSX. So let's get to Silvercorp Metals. It's the same story as with Lundin Mining. The input costs are rising. Silver and gold prices, if we look at African Gold Group, they are, you know, they're not really rising that much, and the margins are compressing here, and therefore these two are just going downhill really, really sadly. Nothing you can do about it. The market is working that way. Lundin Mining did have the benefit of recovering metals prices, industrial metals, from the 2020 lows, and so they have done relatively better. And I can't remember if I had said that in my video, but I think I did in my last video, that I was shifting from Silvercorp to Lundin Mining, or I might have, I can't remember if I did or not, but that's kind of what I have been doing. I remember when Lundin Mining acquired Jose Maria for the project they had in, I think it's Argentina. I remember how Lundin Mining melted like really, really a lot. In one day it was down like 20%, I think, and it came down to an implied 15% discount rate on the cash flow. So I bought a lot there, probably like 600 shares right there and then. And it's rebounded, of course, and it's higher than it was at that point there, but it's the same story here. Is this you know, declining margins on you know, on realized production versus the projected productions that they have. So there's issues in these mining companies that are coming from the market pricing of the input costs and the output products, and that's obviously a bad thing. It's the same we see with PBF Energy, and also, if to some extent here with Century Aluminum, which I had the target correct at $30 a share, and unfortunately, the story with Century Aluminum is a very sad one, because I remember when it was at 21, 22, it was it hit my target that I had in my model valuation. Unfortunately, there was like a screw up in the formulas where it was like, because I have like two files, one for the futures prices and one for the equities, and somehow it was referencing a temporary file or whatever, and it didn't update. So when it hit 22, I sold, and that was just the day before the Russia-Ukraine war thing happened. And as I sold them, I was redeploying money into Russian oil and gas because I was seeing that they were melting, and I didn't think this war thing was going to happen. I thought it was just a hoax, being pushed there to scare people out of Russian stocks, because the oil and gas companies were going to go up really a lot. And so, yeah, I bought the Russian oil and gas producers, and they've tanked. Since then, the ADRs are not trading yet in London. Probably will be next month or so that the war will end, because that's what Zelensky said in March, is that the war would be over by May. So I assume that in May they're going to surrender. And yeah, that's kind of how I see it, is that once that's lifted, the ADRs will start trading again. The Norwegian oil and gas fund, or whatever it is, the sovereign fund, is going to sell out of its positions. That's what they've said. So there'll be a wave of selling, and that will put pressure on those share prices. Might be a good entry opportunity, but you never really know. Then the key point though here with Century Aluminum is that when the war started, there was obviously certain products, not just oil and gas, but also aluminum, that comes from from the Russian Federation. A lot of it that's projected not to be supplied to the market, and therefore aluminum prices soared, and Century Aluminum did really, really well on that, due to market pricing, obviously. But I looked at it again. I thought to myself that eventually, and I think I did do the review of the annual report, and I came to the conclusion that due to the rising input costs, because they use a lot of natural gas for electricity to make the aluminum, the input costs have risen. And if you go by the model, which uses what you may have had in terms of input costs for the prior year, and then you project that over the next year, and then during the year prices have changed substantially, then that's wrong. So I came to the conclusion that it was wrong anyway, so I've not been buying back, and it's dropped to 1970, so it's below where the war started. And I would think that it would go down, just like PBF Energy. I think that will get back to 17 at some point in the near future. Now, Cab Oil and Gas is obviously now Coterra Energy, since they merged with Cimarex. I bought a bunch here in mid-2021, and it's gone up to 28.86 as of the close today. It's been as high as 30.31, I think, well within my expected price ranges. So that kind of was very good that I got the calculation correct, let's say. And yeah, unfortunately, however, I sold most of my Cab Oil and Gas between 19 and 21 in the run-up in September, and it wasn't because I thought it had reached fair value or because I didn't believe in it anymore. It was solely because I looked at EQT Corp, and I came to the conclusion very quickly that EQT Corp was not correctly priced after the Altus acquisition. If we take a one-year chart, you can see here the Altus acquisition was here in May, had a secondary peak in June, but then you can see how it just folded into August, and from there on out, see here, the acquisition was, the shares that were being issued to buy it and the debt that was issued to buy it, that was all accounted for in the share price of EQT Corp, but the assets that they received in terms of midstream assets and reserves in the ground, nobody cared about that. So I saw that was a fundamental mispricing, so I put most of my money into EQT Corp from all my shares of Cab Oil and Gas I sold. And even though Cab Oil and Gas did perform better during this period here of rising prices during October, November, if we look here at in terms of performance, Cabot was like at 21 here. EQT Corp was around, let's say, 19. You can see how the difference is clear, 19 to 45 versus 21 to 28 or to 30. It's just a huge difference. And so I've looked a bit at the quarterly results. I had it open somewhere. Just need to. I can also click on it. It doesn't really matter. But the key thing here with what is good about the quarterly results is that they have regained the investment grade rating, which they had mentioned in the prior release a couple of weeks ago. And they said that with the investment grade rating that they have now, that they would be able to enter into long-term international agreements to sell natural gas, which of course is perfect for the timing of the Europe needing to buy LNG from somewhere, since they don't want to rely on Russia anymore in the future or whatever. So the stars are aligned really well in terms of that, and also very importantly, they bought, I have my calculation here, they bought $200 million worth of stock in the quarter, 8.5 million shares, so they paid an average of $23.50. And they mentioned also in the previous quarterly report for Q4, which was, I think, in February, or was it in January, it doesn't really matter. They mentioned how they had assigned $1 billion or so for share repurchasing, and they said they had not waited and they bought already then. And at that time I was already sure that the stock was worth $35 minimum to 40, 35 to 40 was the Altus acquisition. And so I already knew back then when they were buying shares that it was accretive, and now they've bought even more, which is even more accretive. So we see here the situation has fundamentally improved. Possible we dip here, but that would all depend on oil and gas prices going into the future. We'll get into oil and gas prices here. I also have my snipping tool from my last video, which was let's see, 17th of September. No views, nobody cared, whatever. We can see how we had this run up here, which is this run up here, and when we got to this upper band here, I thought that we would dip, retest, and then go down, straight down. So we dipped, we exceeded it, and then we went below and back above and here and there, and eventually we came down to this line here, this point here. And during this sell-off here, this was the key point here. We were at a premium on most of the oil and gas companies to their intrinsic valuation, and during this sell-off it shifted from like a 10% premium or 15% or whatever to the opposite, a discount of the same amount. And as it was going sideways here, stabilizing, the equities were improving and recovering, and as we got into this uptrend here, we popped off in terms of natural gas pricing. And as you can see in EQT Corp, it coincides with annual report came out somewhere here. It was a clear buy, started moving up, and then the oil and gas price started shooting up and carried it all this way up. And it's quarterly result I need to still look on in terms of the realized sales, what they talking free cash flow, if that aligns with my model at all or not, or how it kind of comes into, in sync with it. But the key point is that during this rally here, and with a positive earnings report, we could see on a natural gas price continuing to rise like it did after this sell-off here, that EQT Corp could go up another 50% from where it is right now. And the same would apply with CNX Corp if they have similar, a similar move or correction to fair value, which is possible that both of them start moving tomorrow because CNX reports tomorrow before the open. And yeah, we will then see what happens. I'm not sure if I have anything more to say, but yeah. Oh yes, I wanted to also talk about SM Energy. So SM Energy, let's find it here. SM Energy. It reached a high here in November, somewhere around 37, 38 or so, and that's what kind of became bearish on it, because I thought the oil price was going to go down. And as the oil price was down, from 80 to 60, the stock was down, and I thought the oil price would continue down and this would melt, but the oil price went up and it's gone as high as 43.69 and moved in line with EQT Corp in terms of the discount to its intrinsic valuation, and CNX Corp, and it has kind of underperformed EQT Corp for sure. If we look in terms of where EQT Corp was in November at $20 a share, EQT is at 40 now, it's doubled, and SM Energy has done nothing. And I do watch some other people's videos on oil and gas, and there are some people who are just bullish. They've just determined they are bullish oil and gas, and they're not going to sell, and they're completely right on the oil and gas price. I don't know if they have like a real understanding if they're just perma bulls and they think it can only go up. But what they really lack is the financial analysis skill. They don't know how to value companies. They, most of them, like one of them I watch, John Polemy, he said he has no idea how to do the calculations on these companies, and he just goes with the sector and a company that looks good, and then he just buys and holds and waits for the market to go in the right direction. And he's been right on the sector. Of course, he's been bullish since who knows when, since 2017, 18, 16, whenever. And eventually the bull market does come, and if you're in the right ones, you do really well. But I think there is always the missing element in permabulls, that they don't do any quantitative analysis, and they don't know when things are expensive and when things are cheap. And when you don't know when things are expensive and when things are cheap, you don't know when to sell. So what they obviously do is they just wait until they see like an excessive move, like an RSI 100 or whatever, and then they just say this must be the top, and then they sell. And it may be the top, but it may not be the top. It's very difficult to know, and you also never know whether it will come. And one thing that's very important is to look at the charts, look for the patterns. This seems like a bull flag and that we're going higher, but when when it's peaked here and went into this downtrend here, was this, especially with this down day here where it was like 2 days lower in a row, and then started going to this down channel, this is kind of where people start selling because they think it's going down, and it very well could. But for whatever reason, when you have a market going in an upwards direction, I don't know who said it, but it was some guest on some talk show like many years ago, and he was like, the news doesn't matter. Once the market is just going up and it wants to go up, it just keeps going. The news can be the best news, the most worst news in the world. it will just keep going up. And this is kind of what we've seen here in oil and natural gas. The market just keeps going up. We do have this outlier event where the war started and we peaked and then we came back down, and as you can see, we've slowly started to stabilize. It looks very much like the gold price in 2019 when we had the US rating downgraded on their sovereign debt from AAA to AA by, I think it was S&P, and that was kind of the event of the high. And here with oil, it was the war, Ukraine-Russia war, where it was the high point in the cycle. And so as that's starting to fade, and the war has been going on, the interest in thinking that the oil price will explode again is waning, especially when we consider that back in March or so, Zelensky said the war would be over by May. And of course, if they surrender or if they're defeated or whatever, it doesn't really matter. When that comes, it's very likely that we will correct. And if you look at this trend line here, you can see that the downside risk, let's take here from the 3rd of May or the 2nd, whatever, it's $81 a share, not a share, a barrel on WTI. And if it goes until the end of May, it's still at 85. So there's a 15% drop possible, 15 to 20%. Then you of course have this, you could draw some support lines here, like this one, this high here that we had would take it to 85. So it is possible that we do see an $85 oil price when this war thing concludes, but we don't know until it happens. So yeah, I'm just going to lead it off with that. I don't really know what to say anymore, and always remember, it's not investment advice. Don't take anything I took here as a reason to buy or to sell any of the names mentioned in the video. Do your own research, make sure you understand what you're doing, and be willing to accept that you may be wrong. So yeah, have a good day.